everyone. We're here with Taylor and Meltem. They'll be doing a fireside chat on risk, and I'll let them take it from here. Can you guys confirm in the chat that you can hear them once they start speaking?
Hello, hello.
Hi, hi. I say Bitcoin, you say?
What?
I said I say Bitcoin, you say?
DeFi, DeFi.
Yippee. All right, can everyone hear us? I think so.
Oh God, okay. Great start.
All right, well, I'm excited to be here, Taylor. Last time we shared a stage together was in person in Palm Springs. Now I'm coming to you live from a family member's house where we were celebrating someone's 70th birthday, and I am locked in the only room where my nieces and nephews cannot find me.
This is important because moments ago I stepped on a banana because children they exist to just screw with you.
They're like little monkeys. Well, I wanted to start today's conversation. So should we quickly introduce ourselves, Taylor, for those on the broadcast who may not know who we are, why we're here, why we're talking?
Yeah, let's do that. So I'll kick it off. I'm Taylor Monahan. I am the CEO and founder of MyCrypto, which is like an Ethereum wallet, although it's getting bigger, I guess. With our new beta, we do multi-accounts. We're going to do some hopefully like crazy balance lookups and recommendations and all sorts of fancy stuff. So we'll see what a wallet becomes in the future. And I am most vocal about things that piss me off, which of late has been a lot. I think it's been around DeFi, and the general theme has been the high risk behavior, the irresponsible behavior, the greed, which, of course comes with the market and of course is understandable, but it scares me a little bit. What about you, Meltem? Who are you?
That's a really good question. Since the start of COVID, I feel like I am less certain of who I am and what I am. But in my day-to-day life and what I do in the crypto ecosystem, so I run an investment firm called Coinshares. We do a lot of different things, including traditional asset management. We operate a series of exchange traded products in the European market with $1 billion in assets under management. And I run our venture investing arm. We also have a trading arm where we do a lot of electronic trading, particularly in the derivative space. And before I did this, I helped build a company called Digital Currency Group from 2015 to 2018. So for the last 6 years, I've invested in about 200 companies in the crypto ecosystem. Ranging from Bitcoin companies, because Bitcoin was the only thing that really existed, to now investing in lots of interesting new protocols, layer 2s, all sorts of interesting projects. And so the way we met, actually, I organize this conference in Palm Springs every year called Crypto Springs. I organized that together with Elizabeth Stark from Lightning Labs and a few other folks. And Taylor, you and I actually kicked that conference off last year. And we had such a great conversation because one of the things you and I think, talk about a lot in our conversations is, in so many ways, it feels like we're living the same story over and over again in crypto, where we go through these cycles. And everyone you meet, the first thing you usually end up talking about is, well, what's your rabbit hole story? How did you get here? What was the thing that led you down this journey where ultimately you decided to dedicate your life to this cult called crypto? I joke. But I wanted to talk about this idea with you. And one of the analogies you made, you're the first person I've ever heard who's used this analogy for crypto. And I thought it was so poignant and so excellent. So tell us more about the early days of the internet and chat rooms and the idea of eternal September, because I think it's a really good lead in to what we want to talk about today.
Yeah, absolutely. So the concept of eternal September was basically in the very early days of the internet. The internet was really hard to access and it wasn't super popular. And so the people that did access it and that did go into the forums and kind of join the quote unquote community were, more educated, usually from very, very developed countries, and were technical people, just like crypto. And what people started noticing was that like every September, there would be this influx of noobs that would show up and sort of disrupt the existing culture and the existing societal norms and kind of just run amok in the forums. And so they figured out this was because September is when people start going to college. And so all the incoming freshmen would get their first access to the internet and just kind of like ape all over the place. And the old guard and the established culture was like, whoa, like slow down. You have no idea what you're doing. This isn't how things are done here. But slowly, over the next month or so, it's not so much that the two cultures would merge, but the freshmen would be like, oh, okay, I understand how it works. And I'm going to kind of evolve. And, now I know how to participate in your community. And then.
So Taylor, I think the big thing there is like communities, particularly online, have their norms, right? And I've talked about this, like how we got on the internet as kids, teenagers, I was into Final Fantasy. It was the best game ever. And so like these forums had unspoken rules. There were certain ways you would conduct yourself. We had our we had our own language, we had our own behaviors, we had our own tools, we had our own way of interacting. It was a whole culture and sort of a set of social norms, but they're not formalized anywhere, right? So these people, they have like no idea what's going on, how to behave, how not to behave. And this kept happening year after year. And slowly, after that September, people would sort of normalize. And by the time the next September rolled around, things were pretty much back to normal until
AOL just opened up the gates and gave pretty much everyone, literally everyone, access to this crazy new place called the internet. And this is notable for a couple of reasons. One, it was open to a way bigger group of people. It wasn't just, the higher educated freshmen, that were from a certain background, et cetera. Like a whole variety of demographics could now access these communities and these forums and these discussions and the internet as a whole. But also the amount of people that joined in a short period of time was so huge, it just dwarfed the entire established community. And there was no way for the established guard to make their societal norms, like the previous societal norms, like they just disappeared because they were just so overwhelmed. And this is why it's called Eternal September. It just never went back to normal. It never went back to the old ways, the good ways, the good old days, however you want to say it. And yeah, I think that crypto, we're definitely still in the early days. And I think that's why this, is at the front of both of our minds. It's like, we're at the early days and we do see this, right? We see every bull run. We see noobs enter and do really crazy, stupid stuff. There's always the dude who takes out a second mortgage to buy his Bitcoin.
Or
and loses it all. And so I guess like the one is, how do we deal with that? And how do we make the pain maybe not as painful for everyone involved so that we can ensure that crypto becomes what we wanted it to become, right? Like something that's different. And then the other question is, will there be a day where someone opens the floodgates and then everything just collapses and the goals that we set out having just disappear and are overrun by whoever?
I mean, arguably, we've already experienced that 2 or 3 times now, right? If you'll in 17, like mid 2017, I remember being at Consensus, which was this big conference. We had just acquired Coindesk 2 years earlier. And so Consensus was typically like a small conference, maybe 500 people who got together to talk about crypto. I mean, in 20, take all the people who wanted to talk about Bitcoin and put them in one room. It was not very cool or very fun. But in 2017, I will never forget this. You literally had Alec in his like unicorn shirt, wearing a hoodie, carrying like Nyan Cat bag, sitting on the floor with his laptop, and there were all these people in suits like around him trying to figure out how to trade ICOs. And I never forget that moment. It was such a wild moment because these worlds that I never thought would intersect so quickly, the world of finance where I'd come from and the world of crypto, which I had sort of been indoctrinated into, like they merged in this wild way. And watching what came out of that obviously was the 2017 ICO craze. And in some ways, there's both really positive effects of that and really negative effects of that. I think the one big positive is we went from being a community of a few thousand people on the internet to being a global community, hundreds of thousands, if not millions of people who held cryptocurrencies, who were in it. It was the start of the rabbit hole for so many people. Maybe not initially, but I think a lot of those people did stay and went through that process of being a freshman, of being in that rush group, and then figuring out the norms and sort of helping shape the new culture that came after and the new sort of norms that came after this summer with the DeFi. And now I think, we're seeing the same thing as central banks and policymakers start to say, like, wait a minute, great environment. Maybe we need that world of crypto. I don't know what the result is so far. It doesn't look very promising. So far, the result is a reaction. But it's really interesting. This is where we get to you and I discussed, which is it feels like Groundhog Day, where we're sort of living the same thing over and over and over again.
Yes. And I think that, so there's two really interesting things happening sort of in the recent months, I'll say. And one is, the countries and the nation states and China and, these politicians getting involved, which, is different. And like involved in a very different way, not in just a regulatory way, but also in a, I think China just like did like basically an airdrop. I think they called it a lotto, but an airdrop of their digital fiat, which is insane. And then we're seeing obviously DeFi, which is probably what most people are here to talk about. But it is like, it's the same, but it's different. But it's the same sort of cycle, and it's the same. I think everyone sets out with good intentions and something that they want to accomplish, but there's also this pervasive, especially in DeFi, this pervasive culture of like just greed and hype and all of that, which we saw with the ICOs. And then down the road, hopefully something of value will come from it. But that's obviously yet to be seen because, I think we've captured some value from the ICOs. I don't know if it's outweighed the chaos that ICOs brought, but we're starting to see like even Filecoin just actually did a thing. But like with DeFi, I asked myself, okay, we're seeing the same things that we saw during the ICO era. We're seeing the same sort of recklessness and the same sort of greed and the same sort of newcomers entering and going crazy, and the same sort of scams and phishing and, but does the value that we're seeing in monetary terms, right? The huge spikes in graphs that just got released because Q3 just ended. Like, does that correlate at all to real long-term value creation? Meaning, like, is it going to be something that's valuable for us beyond simply money? Like, I'm rich now and you're not value.
Yeah. Oh, but look, I think, and you and I have sort of gone back and forth on this topic. I think right now, what's changed from 2017, right, is the world we're living in right now. As we look at the opportunities, you were just mentioning your financial advisor who's like, why is this woman investing like an 80-year-old? And now you're like, I have enough risk in my life, I'm good. I'm good. But as we look at, people who are trying to plan for retirement, companies, right? Corporate treasurers. I used to be a corporate treasurer. I used to trade overnight rates, right? And short-term treasuries. And I could comfortably make 3 to 5% per year with basically zero risk and a high degree of time preference, meaning I had, the ability to enter and exit positions with immediacy. And now I can get 2% on a 10-year treasury, maybe, but short-term rates are zero, right? Target inflation is 2% or higher. So doing what I used to do doesn't work anymore. And if we look at public equities markets, right, what I think is really interesting is since March, public equities have basically gone on a tear. But sector by sector, the results have not been equal. Traditional businesses that are CapEx intensive and OpEx intensive has sort of stagnated. These are core businesses. And businesses that are in the tech space, especially enterprise SaaS or consumer tech products, have skyrocketed. And basically what we see in the equities markets right now is you look at a company like Uber, right? Uber has never made money, ever. And Uber is $50 billion stock. Right. Peloton does not make money. Peloton is an $80 billion company that sells stationary exercise bikes.
I didn't know
Tesla is a company that has never made a profit. Tesla is a $500 billion company. And I don't say this because I don't believe these things are interesting or worthwhile, but I think the way that people are allocating capital is they're allocating capital on the basis of year 2025 PE or price to equity multiples, right? And so the way that people are valuing these things is not on the basis of what they are today, but on the basis of a narrative of what they could be tomorrow. And I think if you look at this phase of DeFi we just went through, we saw something very similar where the way people are valuing something like a Uniswap or a Yeefi or, name your favorite DeFi product here is not based on the facts and circumstances of what the product does today, which really is like, in many cases, these things are one-trick ponies, and there's a lot of copy pasta where it's all, same thing, but slightly different. But what they're really looking at is like, what's the market size for completely disintermediating legacy banking? And so I think we see the same sort of mentality being applied to DeFi, where people are like, look, I can't get even 1% annual yield on traditional assets. Is it really so crazy to take some of my assets and punt them into this crazy thing called DeFi if I believe ultimately that market could be a multi-trillion-dollar market? Not saying at all we're anywhere close to that, but I think from a mindset perspective, this is the behavior we're seeing across the board.
Right. Well, and we are seeing that happen a bit, I mean, at least in my opinion, with Bitcoin, right? We are seeing real institutional money flow into Bitcoin more and more. So this, I didn't actually think about this until you were just talking, but is the institutional money that's flowing into Bitcoin today, or crypto in general, I guess, does that have more to do with Bitcoin, anything that Bitcoin has done, or is it more to do with the other options changing?
Yeah. I mean, the Bitcoin permabull in me would say, yeah, Bitcoin's so amazing. And obviously everyone sees the value of Bitcoin. But the rational person in me would say, look, if you are a corporate treasurer, if you're an asset manager, if you're a financial advisor, your job is to make money for your client. And if you don't do that, you don't have a job. Now, financial services are 15% of the global economy. Right? It's a huge sector. And what we're seeing right now is every tech company is realizing they can also be a financial services company. And so I think if you look at companies out there today, or if you look at the world of asset management out there today, how am I going to charge my client, like Taylor, you're my client, let's say, and I'm your advisor. How am I going to charge you 2% per year on your assets and give you back 0% in exchange? I'm losing you 2% of your wealth every year. How long are you going to continue to pay me to basically do fuck all?
Right.
Not
especially when I can go play on Robinhood and try to figure out what an option is.
Yeah, scary. But also good. Look, at the end of the day, I think we're undergoing a fundamental paradigm shift. And what's great is, Bitcoin was a product of the last financial crisis. Whether that was, serendipitous or deliberate, I believe it was a very deliberate marketing campaign. I believe Satoshi was a brilliant marketer who understood how to create narratives, right?
Mm-hmm.
But as a product of the last financial crisis, I think the crypto economic ecosystem will be a product of this current financial crisis, because in the midst of this like sea of shit that we're living through, the idea to have a global, open, permissionless market where people can trade whatever they want, however they want, with who they want, where they want, when they want,
Mm-hmm.
that feels very attractive.
Oh, it is. It absolutely is. And I think that's been the narrative. Like, we've seen the narrative shift over time, right? But there's always been a very persistent story of you are now in control. Like, fuck the man, you're in control. You can do these things and no one can stop you. You don't have to ask someone's permission. And especially for my generation, the total millennial generation, that was insanely important, because we had been, like, we came of age during an era where, like, the man had done so much to us. Take it or leave it, but that's, that was the perception. And I think that today that's still here. It's changed and there's other shit around it. But the fact that you can be in control, the fact that you can do your thing, the fact that you can trade and build and unbuild and hack and whatever, like, you can, and that's valuable.
But there's risk.
But there's risk. Right.
And what we come back to, what I thought was really interesting, I want to talk quickly about heroes and how quickly heroes can become villains. So as you recall, Yeezy has been just an incredibly popular asset, popular product, really, really vibrant community, a lot of love for Andre, who's one of the core sort of devs behind Yeezy. And I believe his sort of moniker is "I test in prod," right? So in production, which, like, quite a bold thing to say.
Don't do that, please.
It's quite bold. And then the whole sort of incident that happened. Like, I don't know the details. I've read about it, but I don't know anything. I was not involved, so I'm not going to claim to know anything. But basically, like, there was this code base that supposedly the Yeezy team was working on, that was taken, was launched into prod. A bunch of people put money into it, and the money got stolen, right? They got rugged, or rug pulled, as we like to say. That's basically like your bank defaulting on you in trad world, is like getting rugged in crypto. Like investing in Bernie Madoff. That's like getting rugged in crypto. We'll find. But basically, right, this whole eminence thing went down and people are mad. I think actually earlier this week, somebody, like a group got together. They're like an ambulance chaser group, and they're now suing Andre and a bunch of people associated with Yeezy about this. And I'm like, I don't understand how, if you're throwing your money into an unaudited contract on the internet that is built by literally like pseudonymous people on the internet, and you are fully aware of the fact that this is testing and fraud, how are you trying to force someone else to take responsibility for your own recklessness? So I do think there's sort of this irreconcilable tension between the risks people are taking, the risk they believe they're taking, and the risks they're actually taking, that are actually probably going to be one of the major downfalls of this movement. What do you think?
Yeah, no, I agree. And I think it's very interesting because in the last, say, like, month or so, we've actually seen the sort of unforeseen risk shift from users, right? Because prior to, like, say, like spring and summer, right? The risk was on these users who actually thought, and they had no reason to not think that, like, they should do this, because everyone around them was telling them that it was a good idea and it was fun, and they just all had different perspectives. And so I would say that the users were taking on all of the risk at that point, because and not even realizing it. Now, fast forward, after seeing rug pull after rug pull, scam after scam, hack after hack, everyone talking about it over and over and over again, we've really, like, drilled to the bottom of the barrel, to the point where like people are willingly getting in on these things because they're greedy rather than like thinking that it's actually a good idea. They think that they're just like, smarter than the last guy. And now the creators are the ones who are being threatened with getting doxxed and getting sued.
Yeah. And
I don't think that they saw that coming. And I think that's one really interesting shift. I think the other interesting shift is how quick the community is to flip from like fuck the man to like, I'm going to use the man to sue your ass because I FOMO'd into something.
Yeah. And I think actually this is where we get into, my view, like one of the biggest ideological risks here. And it goes back to where we started the whole conversation, right? With the idea of eternal September. Right? We've gone through these repeated iterations of new people, new capital, new ideas coming into the space. And by and large, I will say, like, they have largely been value accretive. Even though the pain that has resulted has in a lot of cases been really profound, and I've seen it firsthand really impact people in a lot of different ways, whether it's builders, whether it's investors, whether it's industry participants. Like there's a lot of pain, but eventually we have sort of come back to this equilibrium. And I guess the question we can sort of end on, and maybe we'll have time for one audience question, is, as we think about the path forward, what excited me about Bitcoin day one is there were no leaders. Like nobody was a spokesperson for anything. Nobody, was Satoshi. Satoshi passed control of the project to certain people, but, the whole bit process meant anyone could contribute. It could be discussed in an open forum. Like this idea of there not being leaders or spokespeople is really powerful. And this new iteration of projects is very heavily dependent on leaders, on spokespeople, on, heroes. And as we know, we at the core are highly mimetic. And if you follow the philosophy of Girard, at some point we will sacrifice our heroes. We require a great mimetic sacrifice. So I just wonder how long it will take until we turn on the very people that are our heroes, and like at what point we get into just a completely dysfunctional meme spiral, which some days it feels like we're already in, or, it's hero to zero within a 6-hour period, which we already saw that, not repeatedly with different projects, where it's like hero to zero a few hours. It's so schizophrenic, I can't even keep up with it.
No, yeah. I mean, the blue Kirby personality specifically spun up and down when I had diminished my Twitter usage because it was destroying my brain. And I literally had to catch up on it because I didn't even know who this person was, who had apparently complete control over everyone's minds and got them to buy all the things. And I think that that's mind-blowing. But I also think it's interesting to think about, people put the quote-unquote influencers up on a pedestal far more than I think any of the quote-unquote influencers want to be. That's going to be a problem. That's going to create conflict, especially if those who are opening their mouths don't realize the effects that they have. But I also think that it is problematic that people who are doing things with good intentions and creating value, whether or not that value is linked to the token price or not, they are doing something valuable. If they are then completely canceled and destroyed by the hordes on the internet who made a bad investment, that's not creating value either. That's not going to be good for the ecosystem. So how do we find that? I don't know. What the hell do we do, Meltem?
Well, my approach has always been disclaimers. Like if you're talking about things on the internet, especially specific assets, just disclaim whether or not you own those assets or not, so people can be clear about what your incentives are. I talk about a lot of stuff that I have zero involvement in, like in any way, shape, or form, financially, emotionally, like from time perspective, or like, oh, you're shilling. I'm like, okay.
Yeah, always.
Or if I'm an investor in that I never talk about, or if I do talk about it, I say like, hey, I'm an investor, I'm a client. So I think like one is trying to bring a bit of transparency to how we engage. But at the end of the day, I think it's also, if we're trying to build this new financial system, there's a level of personal responsibility here that's required that we haven't seen yet. And it'll be interesting to see, are we capable of creating something where you have to take personal responsibility, or have we been so infantilized that, everything that doesn't make any money is basically a scam? That's a very grim way of viewing the world, but arguably it's sort of the pervasive reality today.
Yeah.
I think that's all we have time for. I would encourage people, if you want to chat with us, hit us up in the chat here. Give us a shout on Twitter.
Twitter.
No.
What?
Are you still on Twitter?
Yeah. I just, I open and shut it a lot more than I used to. Open, I'm like, I'm not in the mood.
Nope. Bye.
But yeah, I'm still on Twitter. I'll put our links in the chat, but definitely ping us if you guys want to talk about any of these subjects, risk and greed and value and Eternal September and the crazy valuations of tokens and private equity companies and how Meltem can make you 2% on your investments.
Oh, we're hoping for more than 2%. But I'm not legally allowed to say that, so this is not financial advice.
Not financial advice. Awesome. Well, thank you so much, Meltem, for another awesome conversation, and I hope you guys enjoyed it.
Yeah,
Bye.
thank you so much.